So tonight's presentation, we're going to be talking about starting a business. So just kind of give you a key idea of what we're going to be covering tonight. We're going to be talking about a very important step for anyone starting a business, and that's planning out your business. We're going to talk about organizing your finances to start your business. Talk about some of the paperwork that's required, like to register your business with the government agencies. And we'll be ending up talking about HR issues like dealing with employees. And I'll be just mentioning some additional resources. But before we get into that, I'm going to just start off with a couple of questions myself. For the first question, are you just to give me a better idea of who I have in the audience, are you currently or thinking of starting a business? And if yes, what type of business are you looking at starting up? I encourage everyone to type in the response in the chat box. I'll just give you a minute to do that. And if you're not starting up a business yet, you could indicate that as well. Oh, we got one person just considering, another one considering a design and consulting business, immigration consulting. Yeah, this is all good. It gives me a better idea of what to say over the next hour. Starting a small home care business. Okay, we have a whole mixture of people. I'll just give it a few more seconds here. Also, the next question. In terms of starting a business, especially if you started the process already or started looking at it, what are the biggest challenges you've been facing so far in starting up a business or thinking about starting up a business? Go ahead and type in your responses in the chat box again. Okay, got one, setting up a business procedure. Not sure where to begin from. That's a very common challenge that many people face. Where do you even start? Finance and HR, the process and capital to set up a business, planning and finances, taxation. Okay. Yeah, well, we're actually going to be covering a lot of these areas tonight. So I'll just start continuing on. So the first step in setting up your business is planning out your business itself. This is where a lot of people, when they start up a business, they kind of take shortcuts here. They think it's a waste of time. They know exactly what they want to do. But this is where doing this research step can be quite valuable. Not just starting up the business, but once you get it going, helping you manage and run the business too. If you have this information, you can use this to make good business decisions, to increase the likelihood that your business will survive and that it'll be profitable as well. So one of the first questions or actually the first two questions you should be asking yourself is exactly what is your product or service that you intend to sell, and who do you intend to sell this to? Who is your ideal customer? These are two very important questions that can have a big impact on how you operate your business once you get going, especially when you get into the area of marketing. I've seen a lot of new business owners spend a fortune on marketing, and when they market, they kind of take the approach, oh, I'll just market to everybody. I've got this product and everyone's going to want it, so I'll just market it to everyone. And you're going to quickly find out that that's a very expensive way of marketing. You're going to likely have more success if you have a specific product or service that you want to promote, and you have a specific clientele that you want to promote it to. That way you can customize your service or product to that specific clientele, and you know exactly how you could come up with a more specific marketing plan that'll give you a better results, and hopefully not having to break the bank in advertising. So you definitely need to know what your product or service is and who is your customer. And you should try to focus on just a couple core products and focus on some core customer groups to sell to. Now, the next question is you need to ask, who are your competitors? And this is where you need to start thinking about exactly what your product or service is. Like, for example, I'm going to throw out a potential business. I think we have a miniature golf course in town, but I think at the new Skyway Park they have one. But before we only had one. I think they went out of business and then we had none for a while. So say you decide, well, I'm going to set up a miniature golf course. I'm going to be the only one in town. Who do you think is your competitors? So, like I said, back to the golf course idea, who do you think is your competitor? Or would you have any competition if there's no other miniature golf course in town? Maybe just type your thoughts in the chat box. Who do you think your competition is if you set up a miniature golf course? Assuming there's no other miniature golf course in town. No one wants to answer that question? Oh, there you go, Kim. You actually got the right answer. This is where, you might not have a miniature golf course to compete with, but ask yourself, who are the clientele for such an operation? This is where you got to go back to the previous question. Who is your ideal customer? And actually, what is your product or service? Do you think it's people just coming in to play a game of miniature golf that's your ideal client? Or would you think it's all the birthday parties you can host on Saturday afternoon where you got a whole group of kids coming in, playing miniature golf and having birthday cake and probably having a pizza and pop that you're supplying as part of the experience? This is where a lot of those type of businesses, they rely like on the birthday crowd. So if you start thinking of the birthday crowd, well, all of a sudden, you probably could start listing a long list of potential competitors who are all competing for that same birthday group crowd. Yeah, Chuck E. Cheese's, laser tag, bounce, dino bouncers, but I don't think they're in business anymore. The new Skyway Park, the gymnastics places or the trampoline places. There's lots of places that you're going to be in competition with. So that's why you need to answer these questions. What is your product or service? Who is your ideal customer you want to target? And who are your competitors? Once you know those three items, then you can start getting into a question like, what is the potential demand for my service? If you're thinking, I'm the only miniature golf course in town, people have to come to me, you might think the potential demand could be high. But if you start thinking in terms, oh, I'm planning to offer birthday parties and entertainment uh, to groups of people, like even to corporations, maybe you plan to get like staff retreats coming to play miniature golf. Well, there's other places that's providing the same type of staff packages. Then you get a more realistic idea. Okay, yes, I might have a bit more competition out there. You have to start asking, what is your potential market share? And this can be a tough question. Like, how do you determine exactly beforehand what your market share is? And this is where you just have to kind of provide with a conservative estimate. Don't try to kid yourself into thinking that everyone in the city is going to come to you, but just try to be reasonable. Now, many of you talked about ideas about, uh, I believe there was home cares, businesses. Some were, well, actually, someone was looking at an immigration consulting business. Um, I think there was some consulting businesses, but this is where a lot of these businesses, they sound different, but they actually have something in common: government regulations and restrictions. This is where you need to get aware. Whatever business you get into, you need to determine what are the current regulations. Like home cares, there's a lot of regulations set out by the health department and Copal Health on what the regulations are on how to operate a home care. You can't just say, okay, I've got 3 spare bedrooms. I'll just get 3 seniors to come in and live with me, and then I'll charge them. You just can't do that. You have to meet health regulations, fire code regulations. You got there's a variety of rules that you need to follow. In the case of the immigration consulting, well, yes, if you're planning to represent immigrants and help them with their immigration application, you actually have to take a course to get certified to be an immigration consultant. That was a ruling that they put in place several years ago. Yeah, this were Mark. You were the immigration consultant. Yeah, that's where you need to try to estimate the market volume. Like you may have mentioned that next year Canada's immigration target's 400,000. Um, what does that mean in terms of potential business? Now, keep in mind, all 400,000, some of them are going to do their own forms. This is where it kind of determines how many are going to do it. Uh, and again, you have to keep in mind, where are those people going to? Unfortunately, I don't think Regina exactly is a top uh, pick for a lot of immigrants, unless they're coming especially under our SINP program. I think most immigrants prefer going to Vancouver or Toronto or Montreal. So you have to look at that. How many immigrants are coming to Regina? And you might say, okay, well, how do I get that kind of information? Well, and this applies to any kind of business. How can I get some data about the size of my potential market? Well, a good starting place is go give Tim a phone call. The library actually has a large number of resources that you could tap into to get some of this statistical information. Now, Tim would be more familiar with the exact data sources that's available, but there is some that you can use. And this could help give you a background. Like, for example, I know in past courses, I've had people that are looking at setting up a a grocery store targeted for a specific ethnic group. Well, this is where Statistics Canada does a survey I believe it's every 4 years, that determines, they provide a background of, okay, how many people are of this ethnicity in Regina? And they'll even compare it against past years too. And this is where you could break it down by groups. So, for example, if you're looking at setting up a food store that targets specifically um, halal products for the Muslim community, well, that's where you could, from some of the statistical data, you could get a rough idea of how many people could fit that category. Then you got to go back and start looking at the previous questions. What's your product? Who's your customer? And who are your competitors? Um, this is where, uh, yes, you may find, okay, I'm not the only one who had this idea. There's maybe 5 other stores in town that does the same thing. I know, like, say, for example, in the Filipino store market, I'm kind of somewhat familiar with that. My wife is Filipino, so she goes to many of these stores. That's where 10 years ago, there was just one Filipino store. Now, I don't even know. I lost track of how many Filipino stores there are in town. Now, some of that's to do with the increase in Filipinos in Regina, but it may also got to the point where there might be too many stores. And in addition to the Filipino stores, I know stores like Superstore and Walmart, they start stocking a lot of products from the Philippines and other Asian countries. So they've actually provided a lot of stiff competition to these specialty stores. So all of this kind of gives you kind of the base data you need. And this is going to be important when we get into the financial plan. The more you know about your market, the better that you'll be able to make decisions about whether it's even a worthwhile idea. And as you start to operate, you can use it to monitor changes. Now, Mark just put a comment in, the development plan of Saskatchewan and the 10-year plan that the province wants to have 1.4 million people in their population. This is where, for the longest time, we've been stagnant around the 1 million mark. We never seem to be able to break that barrier. I believe we're at 1.1 million now, and a lot of that's just because of immigration into the province. Whether we get to 1.4 million, that's definitely going to be a challenge. Hopefully we get there, but this is where one of the problems Saskatchewan has is we're primarily a resource province. If you take a look at our biggest industries, like actually type in the chat box, well, what are Saskatchewan's biggest industries? Agriculture is definitely one of them. Oil and gas. Any others? Potash. If you notice, there's a trend in these categories. Uranium, I don't think that one's as big, but yeah, up at our far northern area, we have uranium. You notice they all have a common characteristic. They're all commodities. Basically, we're a very commodity-based economy, unfortunately. So the good and bad times depends heavily on what the prices of these commodities are. And there's times, um, so this is where, like, we don't really have a big industry, or like, it's not as if we have a massive auto plant or a bunch of auto plants. And this is where one of the challenges, probably for us to get up to 1.4 million, is we're going to have to diversify our economy into other areas like service. But again, it depends on what you're servicing. If you're servicing the resource industry, our economy is still tied to the price of resources. If we get into manufacturing, that would be ideal. Like in Regina, we have one big manufacturer, that's IPSCO, or whatever they call themselves nowadays. Um, I, you can tell I've been around for quite a few years. I call things by their old name. Um, um, Evraz, I believe is what they're going by. But even then, Evraz is based on oil and gas. And with the challenges in the oil and gas industry the last 2 years, they're looking at shutting down a lot of their plants. So this is where diversification is going to be vital. And if you want a good example, look at Calgary. 10, 20 years ago, this is where Calgary literally had their ups and downs, just like we have in Saskatchewan. Essentially, it was based on the price of oil. When oil was up, Calgary was booming. As soon as oil dropped, Calgary wasn't quite as booming. But that's where over the years they diversified into a lot of new areas. Information technology is definitely being one of them, and a lot and innovations. So this is something that we definitely going to have to look at here in Saskatchewan, especially if we want to get to that 1.4 million mark. So that's where all of you come into play with your small business ideas. This is where you may have a great idea for a small business that could help us grow the province. So the one final thing you can do to plan your business is do what's called a SWOT analysis. A SWOT analysis stands for strengths, weaknesses, opportunities, and threats. Essentially, the strengths and weaknesses is where you look at yourself as a small business owner and you look at, okay, what am I really good at? What am I not so good at? And where this is going to be important is ideally, hopefully the business you're looking at, it's something that you're very strong. But this is where you may have weaknesses. And having weaknesses is not bad, but recognizing them could be important so that if you start hiring employees, you don't want to hire people who are exactly like you. You want to hire people that could complement your weaknesses so that you don't need to be Superman or Superwoman and be everything to your business. You can hire people or contract people to kind of cover off your weaknesses. So you focus on what you do good and you get other people to help do the things you don't like doing as much. And then opportunities and threats are basically very similar, but it's looking at your external market. Like what's out there beyond you that can provide opportunities. Like, for example, if the province can get up to 1.4 million people, there could be a lot of opportunities in place there. The threats is what are the potential threats out there that we could have? Like, for example, in Saskatchewan, a definite threat is just being so reliant on resources. Every time the price of resources are low, that's going to put a damper on our province. Uh, so again, this is where for you to sit down and take a look at this could help flesh out your business plan. And that's what a lot of this is for. Develop a solid business plan. Now, most people only do this if they need to go to a bank and the bank says, yes, we want a business plan. But this is something you should do, even if you're not going to the bank. This will give you a good planning document to make you aware of what the industry is like for what you want to get into. And then second, you can use it to kind of gauge things as you start moving along. Okay, I'm just checking the comments here. Yeah, because this is where, again, you may have a great business idea, but you may come to the conclusion, is it a viable idea in Regina? And again, one of our weaknesses or or one of our weaknesses here in Saskatchewan, we don't actually have a large population base. Like this is going back a few years ago, but there used to be a fellow who had a magic store in Regina. And he did well, but not too well. It was kind of, he was surviving, but that's about it. Well, that's when he decided, I'm going to move to Edmonton. And he basically packed up his store literally and moved it to Edmonton. As soon as he went to Edmonton, his magic store boomed. This is where he had really good success up there, at least in the shortly after he moved up there. And it was just simply because Edmonton has a much larger population, probably about 4 or 5 times larger, and they have they have more cash in their pockets up there. So they're more likely, there was more people who were more inclined to buying his product and had the money to do so. So again, this is where you need to look at your market. Like I've had a lot of new immigrants who looked at a business here in Regina, and the first thing they comment on, we don't have many people here in Regina. Like we think it's a lot, 250,000 people, but in reality, most cities in the States are like in the millions. So it's definitely a key factor. Now, does that mean you don't do anything? Well, this is where one of the possibilities is to think globally. Like we have this little thing called the internet. Yes, if you try to just service Regina, it might not be enough customers, but could you leverage what you want to do and do it all across Western Canada or across all of Canada or even North America? Well, then you might be able to come up with the customer base you need to make it viable. So you just have to start thinking again, okay, what's my service and who could my ideal customer be? And think in terms, does it have to be someone specifically in Regina, or can it be anyone in the world could buy my product? So that's just some of the key things you need to take a look at in terms of planning your business. Now, the next question is you need to ask yourself how to structure your business. And this is where we start getting into things like tax issues, because there's kind of 3 possible ways you could structure. You could be a sole proprietor, where essentially it's just yourself. When it comes to tax time, you report your income on your personal tax return, and it's just part of your overall income. You can be a partnership. Essentially, a partnership is a sole proprietor, but with 2 or more members. Basically, they just agree to split up the partnership income, and then they split it among the partners according to the percentage, and you report it on your T1 return. Then a joint venture, I'm not going to discuss it. It's just like a different type of partnership. And then you can have a corporation, which is the third more common structure. And a corporation is essentially you set up a legal entity that's basically a person on its own. And it's actually taxed like a separate person. Now, the advantage of a corporation, it can provide you with some liability protection. With a sole proprietor and definitely with a partnership, you have no liability protection. If someone sues you, they can go after not just your business assets, but they can go after every other personal asset you have. And if you're in a partnership, it's actually worse. Your partner could do something to get the business into trouble. And instead of him just being sued, you could get dragged into it and you could end up losing money yourself over something your partner did. So a sole proprietor and a partnership doesn't give you much liability protection. Whereas with a corporation, it gives you that liability protection, or a lot more than just a proprietor and partnership. But it also gives you tax advantages. This is where if you look at your potential income and said, at the end of the day, I think I can make $100,000 net a year from my business. So usually the first question I ask, okay, you make $100,000 net. How much of that money are you going to actually need for personal living costs? Some people might say, well, I only need $50,000 to live personally. The other 50,000 I'm going to invest back in my business. Well, if you did that, if that's the case, if you are a sole proprietor or partnership, you're going to be taxed at personal rates, which is like almost 40% on the $100,000. If you're a corporation and you paid yourself $50,000 salary to cover your personal costs, and you keep the other 50,000 in the company, you would only get taxed at personal rates on the 50,000. The other $50,000 would stay in the company and only be taxed as long as you qualify as a small business corporation, about 11.5% tax. So you pay a lot less tax compared to 33 or 40% tax rate. But this is where you get to keep that tax dollars and keep it in the business so you can grow your business faster. That's the incentive for a corporation from a tax point of view. Just keep in mind, when you eventually shut down your corporation, all those deferred taxes will come back to haunt you when you actually sell the business. But hopefully by that time, you build up the value of your business so much that, yes, you will pay more tax, but more importantly, you're still going to have more money in your pocket after you pay those taxes. So, I have a comment here. Yeah, even if you're registered as a corporation, you still need to buy liability insurance. This is where no matter what business structure you have, you need to have liability insurance. It's just a given. And depending on the type of business you have, if you're a professional corporation, like a lawyer, accountant, maybe even an immigration consultant may need this, you might need errors and omissions insurance. There's different types of liability insurance, and you need to buy the appropriate insurance. Because even if you're incorporated, you don't want to lose everything you have inside the corporation. And sometimes with lawyers, they like to name everybody possible. So they might not just name your corporation, but if you were involved in the wrongdoing or the supposed wrongdoing, they could name you personally as the defendant. And that's definitely where you would want liability insurance. Okay, so let's say a comment here. Your sole proprietor partnership is unlimited responsibility, which means you have to pay the liability for the final penny. You set up a limited liability company. You don't really need to register your legal capital, but usually you will have so much invested in the company in the form of shares. You would have issued so many shares at X number of dollars of shares. But yes, that's definitely a drawback of proprietor and partnership. Is if someone sued your business, it's not just your business assets at risk, it's all your personal assets. Whereas with a corporation, it tries to put some extra protection there. Just keep in mind, don't rely on it 100%. The opposition lawyers, if they see all the money's under your personal name, they'll try to attack you. This is where you got to make sure you have a corporation set up, and this is where you still want to have good liability insurance. Because even if you're in the right, the cost of a lawsuit could be tens of thousands of dollars. And that's where having a good liability insurance package will help cover the cost of that. Okay, another comment. In China or some Asian countries, you need registered capital to qualify for incorporation. Yeah, it's not quite the same here in Canada. You just need to have a share structure, But a lot of people set up a Canadian corporation with just, you could say, I'm issuing 100 shares at $1 a piece, and that's all you need. And the rest could be a shareholder loan that the shareholder is contributing to the company. So yeah, there are different requirements in other countries, depending on how their local laws are. So this is where one other final piece of advice is, if there's two or more of you starting up this business, I would highly recommend a partnership or a shareholder agreement. A partnership is if you're forming a partnership. A shareholder agreement is for a corporation. Because this is where you're on good terms today. But what happens 5 years from now? Things change and you're not quite on so good of terms. And you get into an argument and you want to split up the business. This is where I've seen some fairly ugly fights over how to split up the business, especially if the business went up in value quite a bit. This is where it's much harder to come up with an agreement at that time than it is at the very beginning when you're on good terms and you say, well, if a partner wants to leave, this is the process that they have to follow. And there could be a number of ways it can be done. You could say, well, we're going to hire 2 appraisals and take the average of the 2 appraisals. Or some might say it was a shotgun clause. Essentially what that means is one partner says, well, I want to buy you out for X number of dollars, and the other partner has the right to reject it and to buy the first partner out for X number of dollars, whatever the same price is. That's kind of a mechanism to make sure that the first partner doesn't say, well, I'm going to buy your business for 50 cents on the dollar. Well, then the other partner can say, well, that's a terrible price. I'm going to buy you out for 50 cents on the dollar. So hopefully the first partner is not likely to try to make a lowball offer. It's a lot of people don't like these type of agreements because it usually involves getting a lawyer involved and drafting up an agreement, but it could be well worth it because you never know what happens in the future. One of the partners might get disabled, or they might pass away, or worse yet, they get divorced and their partner, the ex-partner, ends up with a portion of the business and you don't really like being in partnership with them. Anything could happen. So this is where a good agreement will try to prevent a lot of this from happening. So once you decide on your business structure, you then need to register your business. In Saskatchewan, every business needs to be registered. Unless if you're just operating under your personal name and you're not going to be doing advertising, yeah, you probably don't need to register, but you still may need to get a home-based license from the city of Regina. But in terms of corporations branch, if you intend to advertise and operate under a specific business name, at minimal, you need to do a name search and you need to register that business name. And then if you decide you want to be a corporation, you then need to register your corporation with that name. A lot of people think, well, that's corporations branch. I'm not incorporating. Well, you still need to deal with them just to name your business with a trade name. So if you're staying a sole proprietor, but you want to operate under ABC Consulting, you need to go in and register the name ABC Consulting with Corporations Branch before you can do business under that name. And the whole purpose of that is just to make sure you don't accidentally pick someone else's name and start advertising with that. That can create lawsuits. Like if you ever want a quick lawsuit, just open up a restaurant and call it McDonald's or some variation of it. And you'll probably have the lawyers from McDonald's on you so quick that they'll be trying to shut you down. So you want to avoid that. Now, keep in mind, this is all part of creating a business plan. These are all things you need to look at. The next question you need to take a look at is, where do you want to operate your business out of? One of the cheapest ways is working out of your home. But this is where, again, there's government regulations. Specifically, you got to deal with the city of Regina. They do allow people to operate their business out of their home, but there are restrictions. Like one of the key restrictions, they don't like it when you have employees working out of your home-based business. So if you're big enough where you have actually employees, you may need to get a commercial location instead. Also, if you trigger a lot of traffic in your neighborhood, if you start getting your neighbors complaining, yeah, they might not allow you to operate a home-based business then. But the advantage of a home-based business, it's cheap. You don't have to pay rent somewhere, and you get to write off a part of your house as a tax deduction, which can be quite substantial depending on how much of your house you use. Now, the other option is commercial location. This is where you just then have to decide, do I want to own my building or do I just want to rent? And this is where there's a lot of considerations. How much square footage you need. Obviously, the more square footage you have, the more expensive it's going to get. Where do you want this location? Like in Regina, if you're along Albert Street, for example, or in Harbor Landing, one of the new areas, rents can be quite expensive. But if you can go to the industrial part of town, that's where, yeah, rent's not quite as expensive. But then you have to go back to those previous questions. Who's your customer? If you ask your customer, are they willing to travel across the city to use your service? If the answer is no, well, then you may need to think twice. You may need to find a location near where your customers are willing to go. Like, for example, if you look at, say, tax preparation, the business I'm in, H&R Block, they have offices all across town. So this is where you could have people that say, well, why do I need to travel to the opposite end of town to get my taxes done? There's a tax preparer right down the street. Or things like grocery stores. Again, people might say, well, why do I need to travel across town? I have a grocery store right in my backyard. So again, you have to know your customers, and that will help determine, are they willing to travel to the industrial part of town just because you can find a place with cheap rent there? Or do you need to go where they are, maybe like in Harbor Landing, for example? Once you do find a place, you have to look at zoning and licensing considerations. And again, this is City of Regina. This is where they have different parts of the city zoned for different types of businesses. And I actually had one client, this happened to him a couple of years ago. He started up a small bakery or deli or whatever you call it. And he thought everything was okay. It was a commercial strip. It was in a residential area, but it was a block that had all these commercial buildings. And he started up his business. He had to get city permits to do renovations, which he did. 3 or 4 months after he opened, he got a letter from the city saying he had to shut down. I guess, yes, the area was zoned commercial or business, but it was a special zoning requirement. I guess he had to get permission from the local neighborhood to open up his business. And that's where the city actually made him shut down for a month or two until he got the necessary permission. So that's where, again, you need to be careful about what the zoning requirements are. So next is marketing. This is a very big item. And again, all those questions we asked on the very first slide, a lot of them is going to come back here into marketing. First, you want to be able to reach the maximum number of your ideal customers in the most cost-effective way. The only way you can do this is by knowing your customer and knowing where do they gather, what do they read, do they read a particular magazine, or do they all belong to a common club, or do they gather in a special place? The more you can pinpoint exactly where your customers are, and whether this is in the live world or on the internet, the more likely you can find ways of getting your message out to those customers. Because the most common mistake I've seen is overspending on marketing and not getting the results back. Like one term that I hear a lot is people want to get into brand marketing. They want to be known as the brand. Can you guess how expensive it is to become known as the brand in a particular area? Like, for example, tax preparation again. If you ask someone on the street, who's a tax preparer, I probably would say 90% of the time, they're going to probably say H&R Block. They've been around for 70 years. They advertise massively every single year. They have locations everywhere. They paid a fortune for their brand awareness. So if you're a startup business thinking, well, I want that kind of brand awareness, you probably can't afford it. This is where you need to focus on a specific market clientele, because it's hard to compete against those big name brands, depending on the type of business you're in. Likewise, like say, I'm going to pick on the immigration business, for example. You might say, well, I'm going to advertise on the radio. Like this is where when you start up a business, you're probably going to get flooded with phone calls from advertising sales reps saying, advertise in my publication. You're going to get top results. Well, this is where you need to ask yourself, well, who's going to hear me on the radio? And how many of them are my customers who's going to need my services? So this is, again, if you know your customers, you can ask yourself, well, I'm targeting this particular customer base. Do they listen to radio, or do they listen to their or iPods, whatever they're called, or maybe they listen to satellite radio? Yeah, so yeah, Mark, you got exactly what makes you unique. And actually, if you want to add on to that, not just what makes you unique, but you also should be asking, okay, what need or problem does my customer have? Like this is where if you can find a unique solution to a customer's common problem, that's what you should be marketing. Essentially, don't just say, oh yeah, I do tax preparation. Rather, maybe I could say, I help taxpayers deal with audits from CRA to avoid the pain and cost of an audit. That's definitely a painful experience for many taxpayers. And it basically positioning me as an audit professional, like audit in terms of dealing with tax audits. And that's where you could probably come up with some very specific advertising. Yes, exactly. What is your customer's needs or pains? If you know that, that can definitely help you customize your product and service and help you create marketing campaigns to address that specifically. So this is something where all that planning you did beforehand can be very useful at this step here. So that's a good chunk of the business plan. One major section left is your finances. So this is where you need to include all that planning information that we talked about before, but then you need to prepare financial projections and budgets. And you should do this for 3 or 5 years. Now you might say, well, how do I know what kind of business I'm going to have? But something you can predict very reliably is your expenses. You probably can determine fairly closely what your costs are of opening your business over the next 3 to 5 years. Like, for example, I need to rent an office. My office space is going to be $2,000 a month for the next 5 years. Well, there you go. You've got your expense right there. Then you can say, well, I'm planning to sell a series of products. With those products, if I sell $100 of items, it's going to cost me $50 to buy those items from my wholesaler. So right now you got your cost of goods. You know, basically half of your sales is going to be for inventory costs. Utility bills. You might have to pay a couple $100 a month for power for your office. Advertising. You might say, well, I'm prepared to spend this much on advertising every month. So this is where you can probably come up with a good estimate of your expenses. And this is where if we go back to our planning and we know, okay, this is what my product or service is, and this is what my cost of good is. That's your basically the direct expenses of providing that product or service. The difference is essentially what your gross profit is. And this is where you can work backwards. You can say, okay, every item I sell, I'm going to make $50 after all costs of selling it. So if my monthly cost is going to be $20,000 to keep the store afloat, just take that $50, divide it into 20,000, and let's see, what would that be? 50, 20, I think that's 400. That determines how many of those 50 or how many of those items you have to sell every month to break even. So right there, it gives you a good idea. Okay, can I make a profit? Am I able to sell 400 items? And it gives you a much better idea to kind of ask yourself, is it possible? Is the business viable? Because yes, as Troy mentioned, expenses are easy to estimate, but the sales are difficult because you really don't know how many people are going to walk in the door. But at least you now know how many people you have to walk in the door and buy something to break even. And that's better than not knowing anything. So this is where you can then start looking at all your numbers, like the number of ideal customers in your area based on statistics and so on. And you can try to come up with a reasonable estimate. Is this doable? And it'll give you more information. Yeah, and Mark, you're right. The more research you do, the better you are to keep the cost close to your budget. And you basically look at the real numbers. And again, having that budget, if things change, like a budget isn't something that you just prepare and then stick it on the back shelf and not bother with it until 5 years later. It should be a planning tool you can use. So if things change, you can make the instant changes to your budget to see how it's going to impact your business. And a good example is COVID. What happened 9 months, or I guess it's almost 10 months ago now, that made changes to a lot of businesses. And this is where everyone should be looking at your budget and saying, how is this affecting my numbers? Because unfortunately, COVID's going to have a lot of long-term impacts and changes on how customers buy things. And I would say everyone's going to have to look at their business plan and ask themselves, what changes do I need to make to adapt to this new reality that COVID's going to bring? Like a couple examples, the restaurant business. Restaurants have been probably one of the hardest hit industries. Um, Even if COVID disappears, are people going to go and start eating out in restaurants like they used to? This is where they've been basically stuck inside their homes, having to do their own cooking for 10 months. They might find they might just stick with it. They may not go back to restaurants as often. Or even, like, say, a business that's located downtown that relies on downtown foot traffic. You might say, well, yeah, it'll be fine once COVID is gone. But look at the number of people who are now working at home. And there's going to be a lot of businesses that are saying, well, we're going to let our people keep working at home even after COVID is done. Well, all of a sudden, this is where if you rely on that foot traffic, like a lot of downtown restaurants rely on lunch hour traffic, If there's no one working downtown or it's cut back quite a bit, that's going to have a significant impact on your long-term business. And this is where you can take it one of two ways. You could either ignore it and just say, oh, that'll never happen. I'll just stick my head in the sand like an ostrich and hope that it goes away. The problem with that, though, is if it doesn't go away, you're in worse shape. This is where the alternative is. You need to start looking at your business and start asking, what can I do to change things? And it could be a number of things. Like if you're a restaurant downtown, you could look at delivery service if you've never done it before. You could look at relocating. Now, that could have implications, like you need to look at your lease agreement and see is it worth your while. Basically, you need to start looking at or asking the question, what changes do I need to make in order to survive? Okay, so this is the whole idea of the financial plan, just to give yourself the idea. And the other main reason why you want to do this, you want to make sure you have the money to open your business and keep it going without running out of money. So many businesses have this mistake where they started up, they never made sure they had the money in place, and partway through, they run out of money. And they could have the perfect business idea, but without the cash in the bank account, they had to shut down. And you might think, well, how common is this? Well, just ask yourself, what's in that empty lot or what's not in that empty lot on Albert and Victoria Street, Capitol Point? That's where years ago they started up, they ran out of money and they had to stall. Then they got some more money, they started up again, they ran out of money again. And what's there now for all that money they spent? Just an empty lot. Everything got torn down. That's a good example of a place they never had the money in place and they thought they could get it, but they couldn't get it. And the whole project just shut down. Now, we got a question. Is there any bank willing to lend operating capital for startups? Most chartered banks, unfortunately, they don't like dealing with you until you have 2 years of history. So it's tough to get financing, especially for operating loans, because usually there's no security against an operating loan. Now, it may vary. Like if you happen to have a house clear and free, you could look at refinancing your house and using that money to fund your business startup. You could go to relatives, neighbors, and friends, borrow money from them. But sometimes that can get you into more trouble when they ask for the money back when you least expect it. Or there are some government programs out there. Like one program I'm going to mention, like if you're a woman, there's the Women Entrepreneurial Association of Saskatchewan, and they happen to have a grant program where actually I believe it's up to $150,000 you can borrow. You need a good business plan, and they actually even finance working capital. It's a great program. Like you'll never see a charter bank offer something like that, but this is a program backed by the government as part of a special program. The government also has some COVID-related loans and programs. Actually, when was that? About a couple of months ago, they announced a special loan program if you're like for Black individuals. There's a special loan program, but there's been some controversy with that program lately. I'm not sure. Like I think even just in the news today, there is a church in Toronto that applied for funding, and they got a letter back saying they weren't Black enough. And basically, it's primarily a Black church. And even historically, they were involved with the Underground Railway, which, for those of you who didn't know, they were involved with getting African Americans up to Canada to safety during the Civil War period or before the Civil War. So it's there's been some issues. Yeah, there's also BDC. Now with BDC, again, it might be hard to get a startup working capital. Quite often they're a lender of last resort. Usually if you can, they would prefer you go to your chartered bank first. And if you can't get lending from them, then you can go to BDC. But they have some good, they have some strong requirements. Like you have to have a good credit score, and they could be asking for collateral as well. So okay, Mark, put a comment. Great, women has more advantages compared to men. That's, get used to it. It's going to be a wave of the future. No, this is where governments, and even the U.S. is like this now with the new president. They're definitely putting a lot of emphasis on how it's the term, equity and gender equalization. Yeah, so this is where if you happen to be a woman or you belong to one of the other ethnic groups that's not white, yeah, this is where you could see programs coming out as the government's trying to help encourage those groups get more into the economy through small businesses. So it's definitely something you need to be aware of. And a lot of times they're offered through government or quasi-government agencies. Like actually, if you want to see all the COVID programs, just go to canada.ca, and then there's a link that says Canada's financial COVID programs, and it'll take you to a list of all the COVID programs in place for personal and also for business and for special interest groups. And that's where you'll find there's a lot of programs out there that's available. And that actually covered into the next area, grants financing. Something else to look at is you can find some benchmark data. This is where Tim may have some of this at the library. If you're dealing with a franchisor or or you're part of an organization, they may have data like this. BDC and Industry Canada, they also have databases where you could find out like what are the typical results for a business of my type and my size. So this could give you some benchmark data to look at. Then once you do start operating your business, prepare a budget and keep monitoring it, set up a good bookkeeping system and maintain it, and basically look at your data. I don't know how many small business clients I have where they don't look at their data. They just basically look at their bank account. As long as they have money in their bank account, they're happy. And that's where they just bring all their paper records in a shoebox at the end of a week or two before tax season or before the tax deadline. They're not using their information to run their business. Now, the problem with that, though, is if they start coming to me saying, well, I don't have money in my bank account or I can't pay my payroll this month, what do I do? Well, by that time, it's usually too late to do a lot of fixing. It usually involves severe action. But that's where if you monitor your business well before then, you could identify trends and fix it before it becomes a problem. Oh, okay. Now we're talking about gender changes in order to qualify for programs. That's an interesting one. I'm not sure how they look at that. Okay. So this is where to register your business. Basically, you need to go to corporations branch to register your trade name. And if you're setting up a corporation, you would set up a corporation there. Keep in mind, it's to register in Saskatchewan. If you plan to operate a business across Canada, you can register your corporation at the federal level. Usually that's through Industry Canada. But you still remember, you still have to register your federal corporation to do business in each province that you want to do business in. So you still would have to come to Saskatchewan Corporations branch. You don't have to set up a brand new corporation. You just have to register as an extra provincial corporation. so that it registers you that you're doing business in town. Okay, then after you get registered, you then have to go to the Canada Revenue Agency and get all your tax accounts set up. If you're a corporation, you automatically get a corporate tax account. It's a 9-digit business number followed by the letters RC0001. If you're going to be collecting GST, which you likely will, you need a GST account, which is the same 9-digit number, but it's followed by RT0001. And then if you have employees, even yourself, you need to have a payroll account, which is the letters RP and then 0001. And if you're going to do importing, you need an excise account. Now, if you incorporate through the Saskatchewan or ISC, they work with CRA and they automatically assign you a corporate tax account. Oh, excuse me, my voice is starting to go. But this is where, if you need GST or payroll, you do need to register that. You need to contact CRA and get set up with that. So that's the first government agency. There's a few of them. If you're doing business in Saskatchewan, you'll likely need to register for the PST. Even if you're in a business, like say you're a doctor, you set up your own clinic and you say, well, I don't charge PST, they still want you to have a PST account. Because if you buy any supplies, especially from out of province where they don't charge you PST, the government wants you to self-remit that PST on your PST account. So you need to contact the finance department at the government of Saskatchewan to get registered for a PST. If you're looking at a home-based business, you then have to contact the city of Regina. You will need a home-based license. I believe it's about $225 a year. And you better be familiar with what the requirements and restrictions are so you don't contravene them. Because the fastest way to get checked on is getting a neighbor complaining about your business activities. Also, by the way, if you're doing a home-based business, talk to your home insurance agency, because this is where if you start operating a business out of your home, you may need to get a rider on your home insurance policy. Because the last thing you want happening is you have a client come to your door, it's wintertime, they slip on the ice and they sue you. You may find out your home policy may not cover you because they didn't know you had a home business out of your home, and they could deny your coverage. So you definitely want to check with your home insurance policy. Make sure they're fully aware of it so they can have the appropriate insurance in place for you. And then finally, depending on the industry or profession that you're in, you may have some additional restrictions enforced by the industry itself. So again, you need to get familiar with all these rules. So unfortunately, we do have a few government agencies you need to abide by. Now this where if you have any questions, just type them in as we go across. I'm actually getting close to the end here. This is the last topic. Employees. This is another area where a lot of new businesses kind of underlook. You really do need to take a look at, okay, how many employees do I need? What skills and qualifications do they need to have? Because a lot of times that's going to determine the next question, or the next couple of questions. What pay rate do you need to pay them? And do you need to offer them benefits like a health plan, for example, or sick leave benefits or anything like that? This is where a lot of people tend to underestimate the amount of employees you need. Like probably one extreme, I had a fella, he was going to set up kind of like a bistro. And his idea was he was going to open from 6 o'clock in the morning till 6 o'clock at night. So it's 12 hours days. And he was thinking, all I need to do is I just need to have myself working in the back and maybe 1.5 employees working in the front. And that's where he really never worked it out, because when you think of it, okay, 6 to 6, that's 12-hour days. And he was planning to be open 7 days a week. So that's 12 times 7, that's 84 hours a week. So this is where most employees, according to labor standards, and I have the link for the labor standards. This is something you should look at if you're going to have employees. This is where that means unless you want to pay a lot of overtime, you basically need at minimum 2 employees for the one position, because that's 40 hours a week. Anything more than 40 hours, you have to pay overtime. So, but the problem is though, what happens about lunch breaks? This is where, yes, you could have 2 employees, one in the first half of the day, one in the second half. But this is where they only have to work 5 days a week. They're entitled to 2 days off. So how are you going to work that? You can't have them working 7 days a week, half the days. Basically, you're going to need more employees. And then what do you do when it's lunch break? They do get a lunch break. So are you going to shut down your business while they're away on lunch? And so basically, you need to carefully look at your employment, because one of the things you don't want to do is hire employees, kind of stretch the rules a bit, and then the employees get disgruntled and leave. Usually one of the first places they go to is the Labor Relations Board. And they're very employee friendly there. Like I had one client, he hired an employee as a contractor to help do a lot of the setup for the business. He made the mistake of hiring them as employee afterwards. Well, that employee left. I'm not sure what happened, but they were not happy. They took him to the labor board and said, for these 3 months where I was supposedly a contractor, they argued I was actually an employee. He was planning to hire me as an employee all along. Even though that wasn't the truth, the Labor Relations Board sided with the employee, and the employer had to go in, pay overtime hours, they had to pay vacation pay, statutory pay, and a few other extra benefits. So you want to make sure you're familiar, like just things like for more than 40 hours a week, you have to pay overtime. If you call someone in to work, you have to pay them a minimum 3 hours. That's the minimum call out rate. You can't just say, okay, I'm running a restaurant. I thought I needed people, so I called this one person in. It turned out it was a slow day, so I said after an hour, you can go home. Well, you could do that, but you still have to pay them for 3 hours of work. So you got to be careful of that. They're entitled to vacation pay, basically the equivalent of 3 weeks out of 52 weeks, or it works out to about 5.77% of their regular salary. They're also entitled to statutory pay. And if they only work part-time, you still have to prorate the statutory holiday pay based on the amount of hours they normally work. And this is where if you don't do these things, you're going to run across an employee that's going to know his rights, and you could be facing a phone call from the labor board, and you'll probably end up having to pay. Like I had a run-in with one employee. They basically said I owed them a bunch of overtime hours, and I'm thinking, I never authorized overtime pay, and I didn't know where these hours were coming in. Well, it turned out I used to do a lot of traveling, teaching on the road. And while I was on the road, all of a sudden they said they had to work overtime. And I had no idea about this. And the labor board said I had to pay. And I'm thinking, I never authorized this. But this was in my early years. I never had timesheets. I trusted people. And basically it came back to haunt me. So this is where you got to be careful. So that kind of gets into my end of my presentation. I just wanted to end up with talking about some other resources quickly. The Business Development Bank of Canada, they have financing programs, but they also have a lot of good information about running a business. The Women Entrepreneurs of Saskatchewan, I don't think they have a Regina office anymore, but they're based out of Saskatoon, but they still cover the Regina area. And I don't think their offices are even open. They're working remotely at home. But they have a lot of good programs, financing, and they will help people with business plans. There's the government source for information, the Western Economic Diversification Canada. This is kind of the government's um, funding agency for special projects. And then Economic Development Regina. And then there's other agencies as well that you can go to for information or local information. And one other thing I'll just add to this. Actually, I developed a phone app that has a lot of business information on it that I'm just getting published. If you're interested in that, just send me an email, and hopefully within the next week when it's fully published. Right now it's Apple just approved it. I'm just waiting on Google to approve it in the Android store. I'll send you details on it, and there's no charge for it. It's a free service. So basically, I'm planning to have a wealth of business information on that app as well. So I just typed my email address. If you have any questions, feel free to email me as well. I don't mind answering questions. And if you want information on the app, I'll send it to me and I'll send you the links to it as soon as everything's fully up and going within the next 1 to 2 weeks. So that kind of wraps up my presentation. Any questions? And I've got my contact information here as well.